Good day. Welcome to another session of Fog Accountancy Tutorials. Today we are going to continue our series on the cash budget. And remember that I told you in the previous video, which is the part 2 of this lesson, that in this part 3 we are going to look at a situation where the company has set minimum or a maximum cash balance to be maintained at every point in time or at the end of each month. And so we are going to take a question this time around which has an element of a minimum cash balance and a maximum cash balance. There are some questions where they set minimum cash balance. There are some questions where they also set a maximum cash balance. But in this question that we are going to solve, I've designed it in such a way that there is a minimum and a maximum, so that we'll look at the lower limits and the upper limits of cash, so that whenever we hit the maximum, the excess will be invested, okay? And when we hit the minimum, or we go below the minimum, we borrow funds in order to top up, because the company has a cash policy of maintaining a particular minimum cash balance at the end of every month and a maximum cash balance. And so that is the question we are going to look at the moment. So without wasting much time, I want to go straight away to read the question. We analyze and then we solve it together. All right. As the finance controller of Unity Ghana Limited, you are to prepare a cash budget for the last quarter of 2022 as a way of managing the company's working capital or the cash component of it. The following information is available. So the first one, A, sales for the last 6 months of the year, that is July to December, is forecasted as follows. So we have July, August, September, October, November, and December. So these are the sales figures that we have, 320, 420. Remember that there is cedis and millions up. So they are all in millions, 550 million, 690, 730, and then 600 for December. So we are in June. We are assuming that we are in June, and then we are projecting a cash budget from July to December. B, company's history shows that sales are on credit. So remember that I told you that with cash budget, you need to be attentive to the language they speak. So company's history shows that sales are on credit and there is no bad debt. Of the credit sales, 60% are collected in a month of sales, 30% are collected 1 month afterwards, and the remaining 10% collected in the following month. So we are told from the B that, you see, we have been giving sales figures in the first information, that is the A. And then we are told in the B that all the sales are on credit. That is the implication. The company's history shows that sales are on credit. So it means that all sales are on credit and there is no bad debt. And then we've been given the percentages. We are told that 60% are collected in the month of sale, and then 30% are collected 1 month afterwards. So please take note. And then the remaining 10% in the following month. So that is the order. So please take note. Anytime you are reading a cash budget question, these things are very important for you to analyze, and we need to take our time and understand before we prepare the schedule of cash collection from debtors. Okay. Now, the next information, C. The company sells all its products each month. In other words, there are no opening and closing stocks. So let us take note. The cost of raw materials equals 40% of each month's sales. Of raw materials purchase, 65% are paid for in the month of purchase. The remaining 35% are paid in the following month. So analyzing the third information, we are also told that there are no opening stocks and there are no closing stocks. You see, they didn't make it emphatically, but it's an indirect statement that all the company sells all that it produces each month. So there are no opening inventories, there are no closing inventories. That is the implication. So whatever production they sell. Now we are also told that the cost of raw materials are 40% of the sales values. It means that this company is a manufacturing company. They manufacture or produce their own goods and sell. And so they don't buy external purchase of finished goods. But then they buy raw materials to manufacture their goods. And we want the cost of raw materials purchased. Okay, but we are told that it represents 40% of sales. So in other words, the sales figures that we have been given up there, we are going to calculate 40% on each of them. And that is going to be the cost of raw materials for each month. So if there is 100 CD sales, 40% will be 40 cedi. It means that purchases will be 40 in that order. So that is how we are going to do it. Now, please listen. These things I've already explained to you, okay? But then I just want you to understand that the language of cash budget needs to be understood. If you don't abreast yourself with this kind of language or this kind of grammatical constructions, you would be found wanting in analyzing some of these things. So let me go back to the question. The company sells all that it produces each month. The cost of raw materials equals 40% of each month's sales. Then we are told of raw materials purchased, 65% are paid for in the month of purchase. The remaining 35% in the following month. So you see, what we are going to do is that after we have deduced the 40%, okay, of that 40% figure that we are going to get, we are going to strike 65% of that 45, and then we will pay it in the month of purchase. And then the remaining 35% in the following month. We are going to prepare the schedule, which will help you understand very well. So let us quickly finish up with the reading of the question, and then take it again and solve. So the D, wages total 60 million Ghana cedis per month and are paid for in a month incurred. E, so in every month we'll pay wages. E, operating expenses per month totaled 120 million. So that is also going to be paid. Then F, all the equipment will be sold in October 4th for 15 million Ghana cedis. Old equipment. So when you sell the equipment, it's going to give you some proceeds. So that is going to be a cash inflow in October. Then we continue. J, on October 10th, the same month, new equipment will be purchased. So that is going to be a cash outflow for 80 million Ghana cedis. And then we continue. H, rent of 300 million for the period is due payable in December 2022. So in December, we are going to pay rent for the period. That is 300 million. So that is going to be a cash outflow in December. I, the company readjusted and agreed to maintain a minimum cash balance of 150 million and a maximum of 300 million from the end of October 2022. So this is where the maximum and the minimum comes in. We are told that the company has readjusted and agreed that they want to now maintain a minimum cash balance of 150 million. So in other words, even if there is no cash balance, at least 150 million should be there for that month of October onwards. And then the maximum cash balance should be 300 million. We are not going to keep liquid cash of more than 300 million on us as a company. That's what they are trying to say. Now, what it means is that in any month that you don't get the minimum of 150, you need to borrow the difference to add up to get the minimum. That is the meaning. Then in any month that your closing cash balance exceeds the maximum of 300, you need to invest the difference in an equity or debt or whatever investment instrument. But what that we are trying to say is that we need to invest it so that at least the excess cash will be invested to bring some investment income. So we have studied our liquidity levels and then our operation activity levels to realize that a minimum of 150 and a maximum of 300 million will be enough for the company's operations. So every month. So there is no need to keep excess cash. So we only invest the excess, and in a month where we don't get the minimum, we borrow the difference to add up in order to arrive at the minimum cash balance. This is the idea. But as to how we are going to apply it, I'm going to show you from the solution. And then the final one says that the cash balance on October 1st amounted to 10.5 million Ghana cedis. You are required to prepare a cash budget for Unity Company Limited covering the last quarter, October to December 2022. Use any approach that you are familiar with, but show workings. All right. So this is the question. What they mean by the approach is that, when I was teaching you the cash budget, I said there are times where you begin with the opening balances, and there are days where you do all the balancing off at the end. So those are the two approaches. You can use any one that you are okay with, but make sure you show all workings. So we are going to solve this question together. All right. We are going to solve this question. Now, looking at the question that we just read, you see that apart from the sales and then the purchases element, almost the others are all direct payments and direct receipts, okay? And so we are going to prepare for the sales, they are on credit. So we are going to prepare schedule of cash collection from your credit customers, after which we prepare schedule of cash payment to your credit suppliers. Now, just as we are told that all sales are on credit, that is a very fortunate thing on our side. Now, because we are told the sales are on credit, then we can use all. But like I told you, if sales were partly on credit and then partly by cash, we would have only estimated the credit component for the schedule. So watch how I'm going to prepare the schedule for you. We are going to prepare schedule of cash collection from debtors. Now, this is how we are going to collect, and watch how I'm going to do it. The first column, I'll call it the month, and then I'll call the next column total credit sales, which in this case is the whole month sales that is on credit. And then we'll start listing the months. So we have July, August, we have September, October, November, and then December. So I show my currency sign in millions of cedis. All right, now, please pay attention to something. In the requirements, we are told to prepare a cash budget for the last quarter, October to December, only 3 months. But I told you from the previous video that for the schedule, you need to show all the months that you have been given the information, especially for the 6 months, so that, because we know that some of these payments will shift into the months under concentration, which is October to December. So we need to start from July so that we can look at the shiftings based on the percentage payments month after month. And so when you are preparing your schedule, remember to show all the months. But when you are preparing the cash budget itself, you show only the 3 months that you have been required to do. So let us begin. This is what I mean by month. The months, I will list them: July, August, September, October, November, and then December. Now, after listing the months, you list their credit sales in front of them. But in this case, we are fortunate that all sales were on credit. And so we can go straight to the question and find out that July sales is 320 million and August is 420. So July, we put here 320, August 420, because the million is already up with a cedi sign. And then we have September to be 550 and October to be 690. So 550, 690. And then finally, November 730, December is 600. So November is 730, December sales, credit sales is 600 million Ghana cedis. So these are what we are going to list. After this, then we can start with a percentage spreading. Okay, we are told that 60% is collected in the month of sale, and then 30% in the next month, and then also 10% collected the following month, and there are no bad debts. So what we are going to do is that when we pick July credit sales of 320, we are going to calculate and find 60%, and then we assume that we are collecting that in July because it's for July. Then we punch our calculator 30%. We collect that in August, so we put it under August as a receipt in August. And the final 10% will come under September as a receipt in September. So that is what we mean. So when we come to August, it's the same thing. So let us begin. In July, 60% of 320 is 192. So we put that under July. And then we find 30% of 320. That is going to be 96. And then finally, 10% will be 32. So we are done with July. So when you present your work this way, it becomes very simple and understandable. Then we move into August. When we come to August, it's 420. So we punch 60% of 420. 60% of 420 will give us 252. That will be collected in August. Don't make a mistake and put that under July. I've seen some before. So you make sure that you are shifting that onto August, which is the first month. So that is going to be 252. There will be no collections in July for that because it is for August. So please take note. And then 30% will now move to September and the 10% to October. So it will be shifting in that order. So 30%, according to the question, 30% of 420 will be 126. So we put that under September. And then 10% is going to be 42. So we are done with August as well. All right. And then we move on to September. In a month of September, the credit sale is 550, sorry. So we find 60%, it will be collected in the month of sale, which is September. So we shift it to September. So 60% of 550 is going to be 330 million. So 330. And then we find 30% of the same. 30% of the same will be 165. And then finally, 10% will be 55 million. So that is how it's going to be. So you could see that it's being arranged according to the total number of receipts that is being collected every month. Then we move to October. In the month of October, 690, 60% of 690 is going to give us 414. That moves under October, 414. Okay, so you see that it keeps shifting. Then 30% of what we sold in October will come under November. So 30% of 690 will be 207. And then finally, 10% of October sales, 690, 69, comes under December's receipt. I'm sure this is very understandable. And then let us look at the final 2 months. In November, it's 730. So we find 60% of 730, that is 438, comes under November because that is the month of sale. The English they spoke is very clear that 60% is collected in the month of sale. So 438. And then 30% in the next month. So 30% of 730 will give us 219. Then the final one says 10% in the following month. So 10% of November will be collected in December next year. But we are not in for that. So we just end it here. And then finally, we come to December. 60% of December's credit sales will be 360. That will be collected in the same month of December. We don't have anything for January and February, any space for them. So we also end it here. We are not going to find the 30 and the 10%. So ladies and gentlemen, this is how to go by the spread of cash collections from your debtors. So after you've done this, you find the total of each month. Okay, so this is what we do. We are going to find the total. So you see that in the month of July, total will be 192. Then in the month of August, the total cash collection from debtors in August is going to be 348 million Ghana cedis. And then we come to September and then we add up total receipts from debtors in September. That is going to be 488 million Ghana cedis. And then that for October is going to be 621 million. And then we move to November. November is going to be 700 million in total. And then finally for December, we have 648 million. So ladies and gentlemen, this is how to prepare the schedule of cash collection from debtors. And so when we are preparing the cash budget itself, remember that is from October to December. So you are going to pick these three figures and then we are going to send them as cash receipts from debtors. Remember that cash receipt from debtors is not the same as cash sales. So when you are solving a question and there is cash sales, you take it straight away. We have no schedule on that. But when there is credit sales, you prepare a schedule of cash collection. And so cash sales is a different receipt item. And then this cash collection from debtors is also a different receipt item. But in this question, there were no cash sales. And so we are going to present these three as cash collection from debtors under the receipts column of the cash budget. All right. So what I'm going to do now is I'm going to clean this. Okay, we have these figures down. So we're going to clean this and I'm going to prepare the schedule of cash payment to our credit suppliers. This time we are going to pay from credit purchases. And there is also a monthly allocation in percentages. So we are going to pay and we are going to prepare a schedule for that as well. And then afterwards we'll prepare the cash budget. Okay. Okay, so we are preparing the schedule of cash payment to creditors. Now, we are told that the purchases of raw materials represent 40% of each man's sales. So in other words, we are supposed to calculate 40% of all the sales figures and then show that as purchases, as credit purchases anyway, because we are told that is also on credit. So we show that as credit purchases before we split them. So I'm going to prepare the schedule for you. Look at what I'm going to do. Schedule of cash payment to suppliers or creditors. So we underline. And just as we did for the debtors, we show the month total credit purchases. Now, the total credit purchases we are told is 40% of sales. And so I'm showing this in brackets so that we can punch it at once with our calculator to make it easier. So July, August, September, October, November, and then December. So let me show my currency sign in millions. All right, so this is how to go by the schedule. So we are going to prepare this. Now, watch what I'm going to do. July, August, September, October, November, and December. So what we are going to do now is that we are going to show the total credit purchases, which we have been told that is 40% of the sales. So as we have shown in bracket, we are going to punch 40% of the sales, and then we are going to show that as our total credit purchases. So sales for July was 320 million. So we find calculator and we punch 40% of 320 will give us 128. So 128 will be the purchases for July. How did we get this? We calculated 40% of 320. Now, you can do it somewhere as workings, okay, and then bring the figures here. But then I have chosen to show that straight away to make the work easier. So that is 40% of 320. September or August sales was 420. So 40% of 420 gives us 168. So what we are doing is that we are finding 40% of each of the sales figures, and then we are calling them credit purchases. So 40% of September sales, which is 550, is going to give us 220 million. Now, October sales was 690. We find 40% of that, and we have 276. And then November sales is 730. We find 40% of that, and then we have 292. And then finally, December sales was 600. We find 40% of that, and then we have 240 million. So these are the purchases figures for each month according to the question, that we are supposed to find 40% of sales for each month. All right. Then we can continue with the spreading. Once we've been able to find this, I'm sure the spreading is understandable now. Now let us look at the clause that we have again, according to the information B. Company's history shows that sales are on credit and there are no bad debts. Okay, so let's move to the C. The company sells all that it produces each month. The cost of raw materials equals 40% of each month's sales. That is what we just did. Of the raw materials purchased, 65% are paid for in the month of purchase. The remaining 35% are paid in the following month. So that is going to be the rule for this schedule. Only 2 steps payment. In the previous one was 3-step payment. Now it's just a 2 installment payment. So 65% in the first month and then 35% in the subsequent. So we're going to find for July we find 65% of 128, and then we find 35% of the same under August. As simple as that. When we come to August 168, we point 65% of that under August, and then we pay 35% in September. It's going to shift in the same manner. So let us quickly look at that. So in July, 65% of 128 is going to give us 83.2 million. So that is what we have. And so 35% of the same is going to be 44.8 million. So that is how it's going to be. So 65, 35 component of the 128 is completed. So in the same month, in the following month, because we are working with July. When we come to August, we find 65% of 168 and we put that under August. So 65% of 168 is going to give us 109.20. So we put that under August because it is the month of August. Okay, and then we find 35% of 168, and that is going to give us 58.8. That is written under September, but we are going to pay that in September. Then let's consider September's purchases, 220. We find 65% of that, and that is going to give us 143 under the month of September because we are dealing with September's credit purchases. And then we find 35% of the same 220. We put that under October, and that gives us 77. All right, so that is how to go about this. And then in October, the purchase is 276. So 65% of that will be 179.40. So we put that under October, 179.4. And then we find 35% of the same 276. That is going to be 96.60. That comes under November. So we are done with October. And then we move finally to November. In November, it's 292. 65% of 292 is going to give us 189.80 or 80. 189.80. And then 35% gives us 102.2. So that is it for the month of November. And then finally for December, we find 65% of 240. And that gives us 156. Now, the 35% of December should go into January. But like I told you, we are not dealing with January at the moment. We are dealing with the last 6 months of the year. And therefore, we are done with this. So having been able to complete this, just as we did for schedule of receipts, we are going to find the totals for each of them. So we have 83.20 or 0.20 for July. And then in August, the total is going to be 154 million. And then in September, we're going to have 201.80. And then in October, we have 256.4. In November, the total is 286.4. And then finally in December, the total is 258.2. So this is the schedule of payments and supplies. Remember that in the cash budget, we are working with October to December. So we are going to use these three figures as payment in the cash budget. So ladies and gentlemen, having understood these two, let us go straight to prepare the cash budget, where we are going to use these two figures and then we are going to bring them into the cash budget, as well as other information that is given us in the question. Okay. Okay, so we prepared the cash budget for the quarter. So the company's name is Unity Company Limited. Okay, and then we prepare cash budget for the quarter ending 31st December 2022. So we show our months. We have December, we have November, and then we have October. 3 months in millions of Ghana cedis. So we show our receipts first. Now we are going according to the way that we are going to balance. Now we are choosing the method that balances at the end. I think that is more appropriate for me. So we start with the receipt. So we go into the question to pick our receipts. Now in this question, apart from the cash receipt from debtors that we prepared a schedule for, the only receipts that we have is in additional information F. Old equipment to be sold in October 4th for 15 million Ghana cedis. That is the only receipt we have. And so we need to show that as a receipt. And then the other thing is the cash receipt from debtors. There were no other receipts in this question. And so let us begin with the one we made the workings for. Cash from debtors. So maybe working one. So the total that we had for October was 621, if you could remember. For November was 700. And then the total for December was 648. This is from the first schedule that we prepared, the totals that we got. And then let us also bring our proceeds from sale of the assets. So it's an old equipment. Okay, so I've called it PP anyway. Can say proceeds from sale of old equipment. The amount is 15 million, and we are told it's on October 4th. So we'll bring that under October as a receipt. When we sell the asset, remember, even though we are parting way with the asset, but we are bringing in cash, don't be confused that once we are selling, why are we treating it as a receipt? You are looking at the cash component, not the equipment component. The equipment is leaving, but cash is coming in of 15 million in October. But it has nothing for November and December because we took that only in October. And that is the only two receipts that we have. So let us find the total of each of them. So you can see that we have 636 to be the total for October, 700 to be October receipts, and 700 to be November total receipts, and the same 648 for December. After receipts, let's talk about payments. We have quite a number of payments in the question. But before that, let us first of all look at the workings that we did. We did workings for payment to creditors or suppliers. So let us bring that first as payment. So cash payment to creditors or suppliers. Now from the schedule that we just prepared, total for October is what we are bringing. And that was 256.4. So 256.40. And then for November, the total was 286.40. And then finally, for December, it was 258.20. So these were the total cash payments to suppliers according to our schedule each year. Now, under the payments column is a blank column, please. And then we shift and we do this. So now that we've been able to bring in the schedule, let us now go on to the question and pick any other payments that we have. So let us begin from information D, because we've already treated information A, B, and C in our workings. So D, wages total 60 million per month and are paid in the month incurred. So wages are 60 million per month, but they are paid in the same month. So we just write wages. Every month will be 60 million. So wages 60 each month. There will be wages of 60. And then we are also told E, operating expenses per month totaled 120 million. So that one is also per month. So operating expenses monthly, every month 120. Every month 120. So these are very easy to pick. The most difficult ones are what we did, okay? So the rest are not very easy, very difficult. Then old equipment to be sold. That one we've treated it. It's a river, it's an income or a receipt. The next one, on October 10th, new equipment will be purchased for 80 million. So this one is a purchase of new equipment on October 10th. The same October, when we sell to receive this amount, we'll also pay 80 million to purchase. So that is coming as a payment, new equipment. And the date is October 10th. So it comes under October, 80 million. So it has nothing under both November and December. I'm sure this is very understandable. That is not our focus. Let us move on. Then let's look at the next one. H. Rent of 300 million for the period is due payable in December 2022. So this is also rent payment. Rent. But it is not going to be paid every month. It's for the period, but it will be paid in December. So in the first 2 months, there will be nothing. In December, we show 300 million as rent. As very easy as ABC. And then finally, let us look at the last but one, even though the last for what we are doing, the last but one information, which is very important. The company readjusted and agreed to maintain a minimum. So that is about the minimum and maximum cash balance. And then they've also given us in the J, the cash balance for the beginning of the month. So that is it for now. Let us close it before we use those two. So let's find the total payment. So in October, total payment becomes 516.40. Let us look at total payment for November. That is 466.40 or 40. And then in December, we have 738.20. So please, I didn't use a double underline. It's just one underline that I have used. Okay. So these are the total receipts, total payment. We are now going to do the balancing of. Okay. So now we have our total payment and we have our total receipt. So what we need to do is to find the excess of receipts over payment, list them, and then I will show you how to balance it off. And so let's find the difference. 636 minus 516.4 is going to give us the difference. So we call it excess receipts over payment. And then we have 119.6 for the first month. That is the difference. Then 700 minus 466.40. It's also going to give us 233.60. And then the final month, it looks like the payment is more than the receipt. And so the difference is going to be a negative. So the difference is 90.2 in brackets because it's a negative balance. So now that we have our excess receipts over payment, we now close the account. Now, remember, information I is talking about maximum and minimum. We are not going to talk about them until we see the final balance for the first month. But then we have a closing, an opening cash balance. That is J. The cash balance on October 1st amounted to 10.5 million. Now, let me read again the I. The company readjusted and agreed to maintain a minimum cash balance of 150 million and a maximum of 300 million from the end of October 2022. So we are starting from the end of October. That is where the policy begins. And so let us look at our opening balance. So opening balance. Normally, after the opening balance, the total becomes the closing. Then the closing becomes the opening of the next month. We get a closing opening. But because there is a minimum and maximum balance for consideration, I'm going to show you something else. After the opening balance, we are going to leave a space before the total closing balance. That space, we are going to call it borrow or invest. That is where we are going to use for the adjustment of the opening, the minimum and maximum balance. So after the opening balance, I'll call another one borrow or invest. Now, I'm going to make the borrow positive and I'm going to put the invest in brackets and I'm going to show you why. Because when you are investing, it will be an outflow. When you are borrowing, it's an inflow. So that is what we are going to do. So whenever any of the two, when we add and we are not getting the minimum, we borrow and add up. When we add and it's exceeding the maximum, we invest out before the closing balance. That is what we are going to do. So in this case, the opening balance is 10.5. If we add 10.5 to 119.6, we are not going to get the minimum of 150 million. When we add these two, we are going to get 130.1. 130, that should have been the closing balance in a normal case. But because you have been told that we cannot keep a balance below 150 million, we are not going to accept this 130 as a closing balance because we cannot keep a balance below the minimum. So the closing balance is supposed to be a minimum of 150. Even though this two is up to 130, we need to look for a difference that we will borrow to add up to get a 150. So as for the closing, it should be 150 million. But the difference is 19.9. That is 19.90. So what it actually means is that even though the opening balance is 10.5, when we add the opening balance, we are not going to get a minimum. So we have gone to borrow 119 and then we've added it. That is why the borrow or invest column has been shown. Okay, so we borrow 119.9 and then we get 150. Then the 150 will become the opening balance for November. So we have borrowed, mind you, keep in mind that we have borrowed we borrowed 19.9 for the first month. In the second month, let us take the closing balance at the opening balance for the next month. So that is going to be 150. When we add 150 to 233.60, we are going to get 386.6. Meanwhile, we are also told that the maximum should be 300. So we cannot also go beyond the maximum. In other words, we have too much cash on our hands. So we need to invest the difference. Okay, so we have 386, but we cannot show the 386.6 as a closing balance. We need to show the maximum of 300. So the difference of 86.6 will be shown in brackets. We are subtracting, meaning we are investing. That is why when I was doing the borrow or invest, I put the invest in brackets just to teach you how to treat investment. So that borrowing will be positive, investment will be negative. So what I'm trying to say is that because we are getting a cash balance that is more than the maximum, so we need to invest the excess and then show only the maximum. Then let us also bring 300 as our minimum, as our opening balance for the final month. Now, in the final month, the difference was a negative. When we bring a positive 300 to add up, we are going to get 209.80. 209.80 as positive. Now, this 209 that we are going to get as closing balance is within the range. It is below the maximum and it is beyond the minimum. And therefore, in this month, there is not going to be any borrow or invest. So in this month, the borrow or invest column will be dashed so that our total is going to be 209.80 as the closing balance. So ladies and gentlemen, this is how to go by a situation where you are being asked to keep a minimum or a maximum. Whenever the balance, the closing balance, you realize that it's going to go below the minimum, you borrow the difference. When you realize that the closing balance is going to go beyond the maximum, you invest the difference to make sure that your closing balance never exceeds the maximum or goes below the minimum. And for the final month, just as I taught you, it is within the range. And so the only acceptable balance is when it is within the range of the minimum and the maximum. That is when there is no activity of borrowing or investing to either top up the cash balance or to reduce the cash balance. Okay. So ladies and gentlemen, this brings us to the end of our lesson on cash budget. Okay. If you have any issues, I want you to repeat the video, listen, and then try solving some questions on your own, which I believe you'll be fine. Remember to subscribe to this channel if you are new, and then if you are yet to subscribe, like this video and share it. Let others also have a benefit by inviting your friends to join this community of accounting students. I told you that together we are going to grow, and until we meet again another time for a different lesson, it is bye for now. Thank you.